Hey, what is going on, ADPI Nation? This is your host, Kevin Brenner of the Active Duty Passive Income Podcast. And I have an incredible guest, as I always do on this podcast. But today is extra special because we're actually talking about a project that I've been so freaking passionate about for years. Like, you know, those things when you like actually realize your dreams. I'm at that dream realizing hockey stick moment in my professional life where I've always, since I started real estate investing, a lot of you know my story. I went out and I Googled what's the most lucrative form of a real estate investor. And it said fund manager. And then I said how to do that. And it said go to Wall Street. And I said, I don't want to do that. So I have worked my way around. And now I'm proud to announce the launch of ADPI Capital. And we wanted to go and put a podcast out here because for longtime listeners, they may have actually caught a previous podcast when we were first planning this. We were in what's called Test the Waters and blah, blah, blah. Long story short, the SEC made us take that down because they're like, hey, you're in test. Well, actually, that's not true. The SEC didn't make us take it down. We preventatively took that down to make sure that there was an even playing field and that people weren't getting the wrong information and everything like that. It was just easier. But now that we are qualified by the SEC and by FINRA and by all the regulatory bodies out there, we're able to go and officially launch, and not only officially launch, but officially raise capital. And we, in the last week, we have commitments as high as $50,000 to $100,000, and money is coming in, and it's really, really a great thing because, as you know, our guest Adam La Barr, and one of the co-founders of Active Duty Passive Income, the COO of Active Duty Passive Income, and one of the co-owners of ADPI Capital with me, we're going to talk about why this entire long process may have been a blessing in disguise, and why investing in multifamily real estate, given where the market is right now, the timing is almost impeccable. And why we think ADPI Capital is literally an amazing opportunity to for folks to get in, because it provides that access and that capability that a lot of listeners to this podcast may have never even had, to become a truly passive investor. So before we jump into this conversation, I have to mention any investment, whether it's this investment or an investment you do on your own, or you get involved with anyone else, every investment carries risk. So you have to understand that while we're passionate about ADPI Capital and Equity Fund One and everything, it carries risk. Even the risk that you can lose everything. Everything that you put in, boom, gone, just like that. Every investment carries risks. So make sure that you are taking a good hard look at if you're looking at ADPI Capital, that you are viewing our documents, that you're going in and talking to your accountant, you're talking to your family, you're talking to your your lawyer, and making sure that this is what you want to do. If you're using an SDIRA, you're talking to your custodian, you're having these conversations because it's really, really, really important. But without further ado, I want to bring on Adam La Barr to the show here because he has a unique perspective as an experienced multifamily investor, co-owner of ADPI, and co-owner of ADPI Capital, that we're going to talk about here. So, Adam, welcome to the show, man.
Awesome. Thank you so much. I appreciate it. And I always love hearing the legal disclaimers that have to come flying out. So, living in this wonderful country that loves to sue people, it's one of those things. It's a requirement. So
Yeah.
but we've all been around investments. We've all been around these things, and that's just part of the process. There is a risk involved in everything. Stock market. Even putting it under your mattress, there's a risk when you look at the inflation rate that we're at right now. Like, you're losing money by putting it on your mattress. So everywhere has a risk. So.
Yeah, yeah, and it's having the know-how to understand those risks and to figure out the best way to mitigate them, and
Yep.
ultimately, when it comes down to any investing strategy, I would argue that's all about diversification. Like,
For
you
sure.
shouldn't be 100% passive all the time. If you have the time and you want to be active, maybe that's an opportunity cost that you're losing. But certainly tucking it away under your mattress, that's a huge opportunity cost that you're potentially losing out on. So it's about moving the chips around the table and building a strategy that works for you. And why we're so passionate about ADPI Capital and Equity Fund One is that for pretty much the majority of, up until the last, 8 years, these investment opportunities have been reserved for millionaires. pretty much, or people in the know. Call it
Yeah.
people in the know or millionaires, and they weren't really publicized to certainly the military community. Though I mean, everyone listening to this podcast knows that the military is terrible at financial education and financial
Hmm.
literacy, but that's why ADPI started. One of the reasons is to educate military families and communities. But having the access to these types of deals can be a complete game changer for the busy military professional out there. And it's literally our mission at ADPI Capital is to allow the active duty service member, veteran, military family, military spouse, allow them to own more of the land that they swore to protect and defend. And we're doing that by launching Equity Fund One and getting people into multifamily real estate. So Adam, from your perspective, given what's been going on with SVB shutting down, and even the news today, First Republic is being bought out. As we record this today, First Republic is being bought out by Chase. That happened
Hmm.
midnight California time last night, so 3 a.m. Eastern time. That news came out from the FDIC that Chase is buying up First Republic. Um, you know, like what is going on in the market, and what should people who are squirreling their money away be doing?
Yeah, so the market has been a little crazy, right? Highest interest rate hikes that we've basically ever seen on a continuous basis. Really, like it's been nuts to watch. Multifamily real estate purchases have gone down a lot. It's been an absolutely crazy ride. When you see banks getting shut down, especially somebody like an SVB that's been around for a long time. I mean, the interest rate hikes are really what hurt them, and the fact that they didn't stay diversified properly, right? They weren't very their risk was not very spread out. They had way too much in one asset class. Um, which is one of the reasons you mentioned being diversified even in your personal portfolio. It makes a huge difference. But when you look across it across the board, the opportunities that are coming, some people look at it and say, okay, well, what I'm about to say, some people may say, oh, well, you're just trying to hurt the people who are losing, and it can't be farther from the truth, right? So there's going to be people who are going to be losing their property. There's going to be people who cannot pay their bills. They're coming due on a 24-month bridge loan. The interest rates have gone up to a point where they just can't financially support a refinance. And they need somebody to be able to come in and buy their property, and that gives us an opportunity to get it at a discount now and save them from losing their property and destroying their financial future. We're able to actually help people get through this. So I think we're actually in a really good spot here with ADPI Capital Equity Fund One to be able to raise capital at a great time, to be able to hoard that cash and buy properties that are solid cash flowing assets. Obviously, nothing is guaranteed in this world. Similar to the thing you said at the beginning, we're always very cautious about the words that we say, and making sure that everybody knows that there's always risk. And but the deals themselves, right? If we're looking at the deals and we're making sure that they're producing cash flow, that they're able to cover the debt service. There's a thing called a debt service coverage ratio. Most banks require it to be at a 1.2, which means you're making 120% of however much your debt service costs. That way, and that's after all expenses and everything. So they're trying to make sure that you are actually going to be able to pay your bills, right? And if you're getting variable interest rate loans, some of those people are no longer able to cover their DSCR anymore, the debt service coverage ratio. So now we're able to come in and get a good price on it. Now, it's funny. I was listening to a podcast yesterday. A really big real estate investor. I can't remember his name. I think he's got a TV show somewhere, but he was talking about how he's got like $100 million in various different real estate, and he was looking to sell something at like a 5 cap before, and he's like, I'm definitely willing to take a 6 cap at this point for some of these properties. I'm willing to take a 6 cap if the terms are right, and that goes back to there's price and there's terms, and if we can get it set up right, I think that right now is the time where terms are going to make a huge difference in the way we're able to move forward. So being knowledgeable on this stuff makes a huge difference, right? I mean, I've had almost 400 doors of apartment buildings. I've been on a passive side. I've been on that mostly on the active side. I've got various different investments across the board, so I've got a pretty wide knowledge base on where a lot of this stuff goes. or where it can go, I should say. So being able to look at it and say, okay, well, if I can set the terms up based off of X, Y, or Z parameters, I have a much better chance of buying this thing, right? And then being able to operate it in a way that grows our portfolio as opposed to making us risk our portfolio. So I don't know if I fully answered your question. I started going on a little bit there, but long story short, the market has been a little crazy, and I'm really looking forward to this year and next year, because I think there's going to be some fantastic buying opportunities if we're patient.
Yeah, and that's something we talked about another podcast. We recently had Rod Cleef on the show, and just talking about what's going on with interest rates, and we talk about this term bridge debt, this short term variable, most of the time variable debt, on these kind of adjustable rate mortgages, and since interest rates have risen so much, these operators who not only they took on this bridge debt because they thought they can refinance out of it. Um, Maybe they're also underwriting too aggressively. They were underwriting at these 3% year over year rent raises and all of this stuff. And ultimately, like you correctly pointed out, um, they're not able to cover their debt service coverage ratio anymore. So simply put, these operators were too aggressive in their underwriting. They took on they couldn't raise the capital. They didn't have the network like ADPI Capital does to raise the capital to put them in a solid position that would prevent them from taking on bridge debt to fill out their capital stack. So then they took on the bridge debt, and now they can't get out of the bridge debt. And the only way they're going to be able to get out of the bridge debt is either to try to negotiate some refinance with a bank, and the bank's going to look at them and say, no, why would I refinance with you if you couldn't even handle your bridge debt with this other lender? Like, this is probably not good for us. So then they're going to be forced to sell the asset. And that's where what you're talking about is the opportunity for creative teams who have experience in asset management, in specifically multifamily asset management in the B and C plus class territory, for teams like that who also have a lot of capital to put into the projects. Those are the teams that are going to win. And that's why we've been building ADPI Capital, because we know that the 70,000 plus military real estate investors who are in our network already have been craving this opportunity for years and years and years. And honestly, when we started and started down the process of setting this up, Adam, like, we thought it was going to be like up and running in like 6 months. It's funny, like we were like like you have like those Facebook memories or whatever. And it's like, oh, we're starting ADPI Capital, and like literally one came off like yesterday. It's like where we kind of announced the idea to the community, and people got super excited, and we thought like we were going to be up like within a couple months, and it took a year. It took a year for us to get up because of backlog at the SEC and this, that, and the other. But like, now that we're finally there, it's just so exciting, because we're reigniting that spark within the community of people who are like, hey, how do we invest alongside you guys? How do we do it? And this is the vehicle. This is the vehicle that does it. So, looking at the market and where it is, and you correctly pointed out that there are opportunities that are going to be coming. A lot of the people that I follow, a lot of the people that you follow, Adam, we're talking like, summer timeframe, third quarter into fourth quarter is when a lot of this bridge debt, the bulk of the bridge debt, is going to come due, and people are going to be looking for a way out. Now, to be fair, smart operators, they're already daily calling their banks. They're already lining up some, like, they're not idiots. So it's not like it's going to be calamity in the marketplace. But for those people who were really, really aggressive, like you said, some people are going to get hurt. They're just going to get hurt, and they're going to try and sell for what they bought, or maybe even less, and cash their investors out and at least make their investors whole again if they can. And then they're going to be like, all right, maybe this wasn't for me, kind of a thing.
Yeah, there's a reason that me personally, I've slowed down a little bit of my buying, is because there was so much unrealistic behavior happening in the market the last couple of years. The people's expectations were astronomical. I mean, there was even a lender that I was talking with, and we were trying to buy a deal, and he wanted to partner on the deal. And I gave him my underwriting, and it was like, well, this doesn't make sense because blah, blah, blah. And he's like, well, this should be increasing over all of this, and this should be increasing over all of like talking about all these, income being increasing like almost exponentially, and then he was like, oh yeah, and the cap rate's going to be way lower when we sell it. And I'm like, no, like that is terrible underwriting. Like, how, you're the lender. Like, I don't understand how you're even looking at it like this, right? But I've never taken that approach. I've always been on the more conservative side. And has that made me lose out on some deals? Yeah. Will it make me lose out on some deals later on in the future? Yeah. Maybe even some that have been amazing. I don't know. But I would rather stay conservative, know that I'm buying something that makes sense. I'm not looking for a home run every time, but I'm certainly, I want to get on base. But I don't
Mhm.
want to, strike out. So it makes sense to me to be conservative. And now those people who I got outbid by a lot are doing exactly what you just said. Now we're looking at um, dealing with some of those bridge debts that aren't going to be able to be paid off, and it's just going to be a pain. So having us be able to come in and again underwrite conservatively, this is where it becomes an opportunity to have somebody who looks at it conservatively. And so if we raise the capital up front, like we're doing with ADPI Capital, raise a bunch of the capital up front, so we're ready. We've got the leverage point to be able to say, hey, we've got this money that we can put down already. We can pay for things in cash if we really want to. Prefer not to. Would much rather have debt. But we've got opportunities to be able to do these things that other people aren't going to be able to have. Even some of the larger investors aren't going to be able to have. A lot of the purchases that have been going on right now are 1031s. So people that sold their property, they've got a whole bunch of equity, and they need to buy. So that's the reason they're buying. Where we're not going to have to be forced into buying anything. We have the opportunity to be able to kind of pick and choose what we want, make sure that the markets are good, make sure that our operators are good. And I mean, the operators, we train them in the Multifamily Academy and Mastermind. I mean, they're crushing it out there. So it's awesome to watch them do that. And I look forward to closing some deals with our Mastermind members. So it's I think it's super exciting, and it still comes back to being conservative, being smart with our money, being smart with our purchases. It's uh, it is something that we have not seen over the last couple of years. A lot of people being crazy, and looking forward to hopefully some some calmer seas ahead.
Yeah, yeah, and I'd like to bridge the conversation into the ADPI ecosystem. That's what we
Yeah.
call it, because really, anyone can start a fund, right? I mean, candidly, I started a fund. I started my own private equity firm, and within a year, it failed. I mean, I raised some money, I put it into a deal. The deal went well, and I ended up it wasn't sustainable anymore. But I was able to take those lessons learned and apply them to ADPI Capital and pretty much pull out all the great lessons that we learned and put them into a different type of capital raise. And you know, when we talk about this ecosystem, we realized that, like everything in ADPI, any product, service, anything that we create, it's usually created from a member asking for it. And Adam, if you remember years ago, we had so many people. Anytime Eric or Tim or you or anyone would post like what you're doing in the group or on your personal page or whatever, you'd always get people from the community saying like, hey, how can we invest with you? And for the longest
Mhm.
time, I mean, really, literally up until last week, the answer was, well, let us teach you. Let us teach you how to do what we do. And and then you'll have, it's like teach a man to fish and he'll catch more fish kind of a thing, right?
Yeah.
So we did that. And we cycled through how many? Nearly 200 people went through the Military Multifamily Academy, and there's been many iterations of that. And we set up a cohort for it, so you can get paired up with team members and actually fill out a GP team, and you're on your way, and you're searching for properties. And guess what? You teach people something. You show them how to do it. You put them in a mastermind where they can get all their questions answered. And guess what? They start closing deals. And our teams have been closing deals. But what that does for us at ADPI Capital, it allows us to create this bridge between the community who has been asking us, hey, I really want to invest in these deals, but I am way too busy, or I am way too this, way too that, whatever the objection may be, not excuse, but like whatever reason that they can't do it, they're saying, I want to do this, but I can't.
Mhm.
And for those people that say, well, we're like, hey, well, why don't you just take this course or whatever that we're providing you? And they might say, wow, that's such a great option, but I don't have time, man. I got full-time military job. I got TDY. I'm deployed. I'm this. I'm that. I got kids. Whatever. They're not ready to take that commitment, that time commitment, and that's totally fine. Well, then that's where our conversation had to end, really, because we're like, well, sorry, I mean, we can't help you. But with ADPI Capital, now we can, because they're able to become passive investors and investing in our community. So the deals, Adam, that we're finding, we talked about how conservative you are of an underwriter, which is great. And you're our
Mhm.
chief underwriter at ADPI Capital. But the deals that are being found, can you walk through like the cycle of how we have built this system on the deal acquisition side? People listening to this podcast can kind of understand why we created this vehicle that is Equity Fund One.
Absolutely, yeah. So, in a picture, excuse me, a normal syndication, right? I go out and I find a property, I get it under contract, and I go and talk to a bunch of investors and say, "Hey, I feel this is the property I've got. I'd love to get you involved in it and do all this stuff." And then, okay, we get investors, we buy a deal, we close on it. I operate the deal for the whole time. Maybe I find another one. Hopefully, I find another one or two. Maybe some of these investors join in. Maybe they don't. I don't really know. The investors I already have. It's a bit of a process over and over again with all these investors. But I'm raising for one deal. In this particular case, what we're doing is raising for multiple deals that we're able to close with the entirety of our community, and anybody else who wants to invest. Right. So the way the ecosystem is kind of set up is we have, let's say 70,000 people roughly that whether it's our podcast, our YouTube channel, our inside the Facebook group, wherever it is, that want to be able to invest. Um, they're in the community for a reason. They like real estate. They like being able to passively invest in things. They like being able to invest as a whole. So this gives an opportunity for them to invest not only in real estate and get K1s, which provides, we can touch on that a little bit later, but like that's showing you the ownership in the LLC that actually owns the property, as opposed to like a REIT or something like that, where you're not getting any of the tax benefits. With a K1, you're getting those tax benefits. So we get people a K1, get them to understand how this works while using their funds to invest in the multifamily mastermind members deals. Now, these folks are already out buying, I think we've closed, it's in the billions of dollars of real estate inside there. So, yeah, within the group. So it's pretty awesome. They're in there closing, 200 unit deals, 300 unit deals, down to 10 unit deals. So, we're able to now raise capital from the community to be able to invest in deals that our mastermind members, who are military members, veterans, spouses, just like the folks that are listening and in the group, they're closing these large deals to be able to provide a return on the investment to our community again. So it's the what I like to call our self-licking ice cream cone of the community. It's a constant revolving door of being able to say, okay, well, we're raising money from the community to invest into the community to give back to the community, and it's all about the people. So in a regular syndication, there's not that much. Sure. I mean, I'm helping 5-6 people, 10 people maybe on my investors, but here we're able to help 10,000 people invest into
Mm-hmm.
amazing cash flowing properties, which is it's awesome because it's also providing an opportunity for our mastermind members to be able to say, you know what, I want to partner with my community. I want to partner with people just like me. And then inside the community, there's a bunch of people that are saying, hey, I really just love being, it's the same thing we tell our investors, right? When I'm talking to an investor, like, well, why wouldn't you just go buy the property if you have the money for it? Well, because maybe they love being a doctor. Maybe they love being, maybe they love being in the military. Maybe they love doing all this stuff, but they still want to invest in real estate. So this is where a passive opportunity like this opens the door to be able to say, okay, wow, I never thought, I didn't even know, what is it? Steve Jobs, I think is who the guy who said famously was looking at it saying, hey, my customer doesn't even know what they want. I know what they want better than they know what they want. Like maybe somebody listened to this didn't even know that they wanted to passively invest in something. They didn't even know it was an option, but all of a sudden it gets built. They look at it, they hear about it, they go, wow, this is exactly what I've needed. I've been wanting to get in the real estate game, but I really love being in the military. I retire in 10 more years. What can I do now?
Yeah.
With as little as $500, you could invest in a multifamily property in an apartment building. And that's pretty exciting. And not only doing that, but you're giving back to the same community that is given to you. So it's awesome to kind of see the way we've structured it. And I'm saying that obviously with a little bit of bias since you and I are kind of the ones who structured it, but it's exciting
Yeah.
nonetheless, right? I mean,
But
it is. I look
yeah,
forward to seeing it come to fruition all the way.
and that speaks to the time and the effort. I mean, we didn't just put this together willy nilly. You
Yeah.
know, this has been years, literally years and hundreds of thousands of our personal dollars in the making to make this happen, because it's not going to happen overnight, and it is very expensive to set up. Like, we could have gone the easy way and just set up a regular, 506c 3c1 fund, which is like every standard syndication that only allows accredited investors, and you can publicly advertise and all of that stuff. We talked about it multiple times on other podcasts.
Mm-hmm.
But the barrier, the problems with that is, well, you can only have 99 investors, right? So, okay. And when you only have 99 investors, there's a forcing factor right there that is built into the model that says, well, I can't just have a $500 minimum investment and only have 99 investors. That's not going to,
Yeah.
when I need to raise a couple $1,000,000 and I can only raise 50,000 in that model, that ain't going to work. So I got to make the bar to entry really high, maybe $50,000 minimum investment. Not only are these people, you already have to be accredited, right? Which means you have to be making at least $200,000 a year. If you're married, it's $300,000 a year, or you have to have $1 million net worth, not including your primary residence. So you have to have some, you got to have some net worth going for you to even get into to even put your foot in the door of these deals. Then on top of that, then you got to go and part ways with up to $50,000 in an investment. I mean, I was looking at an investment the other day. The minimum, Adam, to get in was it was a $250,000 minimum
Mm-hmm.
to get in the door on a single family development deal in Naples, Florida, somewhere like that. And I was just like, no, like, this just doesn't make any sense. But those are the things that are out there for folks. And when we were structuring this, we said, okay, well, guess what? This is not our community, and we know that. So we had to figure out a way and structure something that would allow us to remove as many barriers to becoming a passive investor as possible. And off the bat, the first barrier that we can think of was, okay, well, how about this high minimum investment?
Yeah.
Like, what do we do there? And Adam, as you correctly mentioned earlier, we lowered the bar down to pretty much an unprecedented $500. So $500 as a minimum investment. A lot of people in the military community can part with that and make a smart financial decision with 500 bucks. And if you can't, then you probably need to work on your personal finances. And obviously we can help you there too. We have the free blueprint to financial success on our website. All of those resources, all of them free. You can go and grab them on our website. But point is, we removed the barrier to that one barrier to entry. The next one that we came up against was this accredited investor thing. Like, what the heck, man? Like, okay, that's, again, some of our community members are, because they own a lot of real estate and maybe they improve their net worth, blah, blah, blah. But for others, they're just not yet. They want to be, and they're not yet. So the traditional fund manager out there will say, okay, well, come back to me when you're accredited and I'll let you in these deals. Well, that's, I think, is kind of BS. So we wanted to give people access. And the way to do that was to structure a fund that didn't require accredited investor status, but also allowed us to publicly advertise and let people know about it, which is super important. When you have a really great product, it could be the greatest product on earth. If you can't advertise it, then it's useless. If no one knows about it, like, what are you going to do? So we looked at that and we said, no accreditation status required. Then we looked at all the other funds that were doing this. So as we're doing this, we're looking at funds, and you see these fees. Oh my God, the management fees, the ridiculous fees that these fund managers are charging people. We're like, no. We're not doing that either.
Yeah.
No recurring management fees at the fund level. Not doing that, because every fee, it comes out of the investor's end every single time. So we looked at that and we said, okay, this is what we ended up with. We ended up with a fund, and we structured it as a Reg A plus Tier 2, which took forever to get qualified and a lot of money and a lot of lawyer fees and blah, 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 blah. But we ended up with something that, number one, $500 minimum investment. Number two, you didn't have to be an accredited investor to get involved, which spoke to a lot of our community. Number three, we're not charging any management fees. And guess what? We can have an unlimited amount of investors. We're not capped at 99 investors like those other syndications are out there. Plus, you combine that with the fact that we're investing in the community. The community is investing in the community of Mastermind members. I mean, and like you said, what would you say? Like with a little bit of irony, we're saying like this is like an amazing slam dunk opportunity, but
Yeah.
you know, truly, like there's not much out there that I can compare it to. The only thing I can compare it to is like looking at Fundrise or Yield Street or something like that, because
Mhm.
we did look at a lot of their model when we adopted ours. But I would argue that they don't talk to the military community. They're not us. We're us. And and
Yeah.
and, and having that military, I don't know, man. I don't know what it's called, but any vet knows, or any active duty service member can pick out the other service members in the room. I don't know if it's just like built into us or something like that, but having that, into the model, I think that really really helps, makes decisions easier for folks. And since we've launched, we've proven it because we've been raising a lot of money really quickly. Um, so yeah, in my ramblings there, Adam, I'm sure there was a question for you, but ultimately, like, we remove the barriers to entry, and we have this ADPI ecosystem. Like, for is there anything that I'm missing that is within Equity Fund One that we think people who are listening might want to hear about more?
Well, so I mean, we've covered kind of who it is, who it's for. I mean, really, it's for anybody and everybody. I mean, you can tell your parents, your brothers, your sisters, your cousins, everybody about it. It's not just for the community; it's for anybody who wants to invest in real estate on a passive level. With again a minimum of $500. I mean, you don't really find that anywhere else. And again, this isn't a REIT. This isn't something like that.
Mm-hmm.
Where a REIT, a real estate investment trust, is not really. It's borderline, basically just a stock. If to break it down a little easier, where this is actual ownership in the LLC that's
This is
buying the
equity.
company, or buying the, this is equity in the LLC that's actually buying the real estate. Um, this allows for, again, the tax benefits. It allows for all of that. I mean, it gives you an opportunity to really give back to the community, as well as receive income from it, right? So um, uh, it it's it's a completely different type of thing when you're uh, we all want to be involved in real estate. Again, that's probably one of the reasons you're listening to this. But to not only be involved in real estate, but also be able to do it with your actual community of like-minded investors, like-minded people, makes a huge difference. So I mean, there's a whole bunch of stuff on the documents, from like, when do you start to receive your returns? It is a long-term investment, so it's going to talk about that in a lot of the documents. Like, this isn't something that you're going to put your money in and pull it right back out. This isn't something that you're investing for the long term. 5 to 7 years is kind of what we're projecting. So you're spreading your risk across multiple different properties. Like, the intent is to buy a good handful of properties with this initial raise, with this first fund.
Yeah, maybe we talk about what Equity Fund One is, because I think we
Yeah,
kind of glossed over, because so ADPI Capital, we've been working on that, but our first fund is Equity Fund One,
correct.
and it's a $10 million raise. And just for context sake, we opened up last week, and within a week we have over $500,000, so of commitments in the system right now. So people are interested, to say the least, and that's going to keep coming up. So yeah, maybe Adam, we take a couple minutes here, and
Absolutely.
yeah, and guys, if you're listening to this podcast and you just want to, like, okay, you want to be that person that just really wants to learn more information, just go to adpicapital.com. There's going to be a video of Markian. He's going to explain what Equity Fund One is, and there'll be a big red button that says Get Started. Or you can click on the top right and go right to our investor portal and invest instantly. I mean, the process is quite smooth. You're going to have to review documents. You're going to have to go through this, but it is very smooth. It's very mobile friendly. Um, so you can go and take a look at it. But it's just www.adpicapital.com will get you where you need to go. Now, the questions, because I've been doing this for a long time, but recently, over the last week, I've been talking to, obviously, a lot of prospective investors, Adam, and the
Mm-hmm.
one question, and what I'll do is we'll just go down our frequently asked questions, but the one that I personally get a lot of is, can I invest money now and then invest money later in the same fund.
Yeah.
And the what I've been telling investors like over and over and over again is technically, yes, you can. But if you go and put $500 in now and you get, and that buys you 5 shares, right? Each share is $100 below a $75,000 minimum investment. And if you get above, if you invest more than 75,000, it changes a little bit. But let's assume that your investment is below that 75,000 threshold. You get, it's $100 a share. So you put $500 in, you get 5 shares. If you go and come back a month later, or 2 months, or 6 months later, and say 6 months later, and you say, well, I want to put 500 more dollars in, can you? Maybe. Because if the fund is filled up, if we don't have any more shares to offer you, then no, you can't invest. Like that's not how it works. So what I've been telling investors is, if you're interested, put the amount of money that you actually want to invest in, and don't expect to be able to like recur and repeat investments. Also, keep in mind that each investment will be treated as a different account. So you're going to get 2K1s then, and you're gonna I is it possible? Yes. Will it make things more complicated? Yes. So keep that in mind when you're considering investing. Invest what you want to invest, and with a $500 minimum investment, the pretty much the world's your oyster. As far as it's not like we're saying, oh well, invest what you want to invest, but the minimum's 50,000. Like like we're not saying that. So you have a lot of leeway there, but don't expect to like every month just be putting more money in, and because at a certain point, if the fund is filled, then the fund is filled. I'm sorry, that's just kind of how it goes. Question for you, Adam. You mentioned it's a long-term investment, 5 to 7 years. It is considered a liquid. You can't be pulling your money out and putting it in, and it's not crypto. It's not a stock. It's not a REIT. It's not publicly traded. Nothing like that. This is a private fund. I've been getting a lot of questions about SDRAs.
Mm-hmm.
What is it, and can people invest with that?
Yeah, so a self-directed IRA you absolutely can invest with for sure. That's actually one of the ways I'm planning on investing on my personal side, is through my self-directed IRA. So like when I left the military, I took my TSP and I put it into basically a self-directed retirement account, an EQRP, where I've now invested in multiple different things with that. And I took my regular IRA that I had with, like, I think it was T. Rowe Price, and I made it a self-directed one so I can invest in whatever I wanted to. I was tired of the fees that you talked about. I was tired of the lack of control in my investments. I was seeing the successes on the real estate side and on the business side, and I said, well, I'd really like to be able to take advantage of that in my retirement accounts as well. And then I don't know, a couple of years after I did that, I can't remember which entrepreneur it was, but I'm forgetting his name, but he got like I don't know, $30 million or something silly like that in his self-directed Roth IRA. So it was all tax-free retirement account type
Wow.
stuff. Because when you're doing it in a Roth, it's post-tax. So he managed to be. I think
Because
he
he
was
was
one of the
just putting in
founders of.
different deals. Like he was putting in deals,
Well,
putting in deals, putting in, and
yeah, he
built
was
it up
putting
that
in
high.
various deals, but he was, I think, one of the founders of like PayPal or something like that. I
Yeah.
can't remember the guy's name, but so he just, as they were building that out, he took his shares and put them, put the ownership in his self-directed IRA, his self-directed Roth IRA. So when he was eligible for Roth back then, he put a bunch of shares into it and ended up making huge money. But I'm saying all that to say, like, seeing the power of a self-directed IRA and self-directed Roth IRA makes a huge difference in your investing future, because you can invest in wherever you want it to go, but you still get those tax benefits of it's all post-tax money that you're putting in there, so you don't have to get taxed on the way out. Um, so yes,
Yeah.
you can invest with a self-directed retirement account. I'm saying all that to say that.
Yeah, and for you converted your TSP to a self-directed vehicle, because I mean
Yeah.
gosh, I had like 50,000 in my TSP. I probably have like 35,000 now. I haven't checked it in a while, but I'd be personally interested in following in your footsteps. What is that process like to make that conversion? Is it like a total nightmare, or is it possible?
No, it's actually, so the hardest part for me was having the government say that I was actually out of the military. So I kept calling and calling and calling and calling and calling. They said, no, it still shows that you're still in. So I wasn't able to pull my money out. Um, there's a way to do it while you're in. There's only certain times to do it. I don't know all the details on that, but after I separated was when I did mine. It makes a clear line of when you can do it. Is, hey, you're out, you could pull it out. Um, it was actually pretty simple. I mean, I already had my self-directed IRA through the company, with the EQRP company that I use, and I just gave them a call, said, "Hey, this is what I want to do." They even got on the call with TSP with me, helped make sure that everything was transferred properly, helped fill out all the paperwork, got it all transferred over. Life was actually pretty easy. It was a lot more smooth than I expected it to be. Once the government actually released me, and that you would think after almost 20 years of being in government service, I would have realized how slow and painful it was to work with the government. And then
Shocking.
that happened, and then we started to work with the SEC for this, and it was like, oh, it's starting all over again.
No, the bureaucracy, the slow wheels of government are
Oh
turning.
yes, they were turning.
Yeah, slowly, but we got it done, and that's the most
Yes.
important part. So yeah, I mean, and Equity Fund One, it primarily we're looking at multifamily, like I said, B and C plus, 80 to 100 plus unit multifamily class assets. That's where we're going to be kind of focusing right now, because we know that's a great asset class to be in. We already talked about that. We're relatively confident about the opportunities that are coming up. And as much as Adam and I like to complain about, oh God, this took so long, that hindsight being 2020, that may have been a blessing in disguise, because while we were getting qualified, we weren't able to raise money. We could kind of sort of talk about it, but we couldn't actually raise money. And it turns out that the recent Fed tightening and the forcing factors, that are causing the markets to shift in the buyer's favor, because it's been a seller's market forever in multifamily. And I say forever, but I'm talking like the last 12 years, maybe less than that. But it's been a strong seller's market. It's now shifting to a buyer's market. So for us, and for investors looking to put their money into something that gives them quarterly returns, that gets them legit ownership of multifamily assets, to include all the tax benefits, the K1s, from all of the depreciation, from the cost segregation, the bonus depreciation. That, by the way, is still a thing. It might not be 100% bonus depreciation, but we're still get 80% bonus depreciation.
Yeah.
That is coming out. And this could be huge, especially if you have other real estate investments, other income producing properties, and you need you need some depreciation. This is a great way to take a look at that. And oh, by the way, it's a passive investment, so you're a limited partner in the deal. So yeah, I mean, we're looking at these multifamily assets, and they're great because they have these tax benefits. For folks who, another big question I get is, okay, if I invest with you today, like when am I going to start getting these quarterly returns? And that's totally a fair question, because honestly, a lot of this is based on timing. So, Adam, with that regard, what would you, how would you answer that question?
So it is based on timing, right? It's that famous "it depends" answer, right? So the way the documents are written, within 6 months of buying our first property, executing on the first property is what our intended start time is for doing our quarterly distributions. So we have to raise capital first. It's what's called a blind fund, meaning you don't know what you're actually investing in other than the basics: B and C class multifamily.
It's not like the
that
property on 123 Main Street.
Exactly. You're not investing in 123 Main Street. You're investing in your community with your with the ADPI Capital team, knowing that we're going to be working our butt off to make sure we find the right deals for you, for the investors, right? So as soon as we have $1 million raised, which is not going to take much longer by the looks of things, as soon as we have $1 million raised, it's officially active. We're able to start investing with the fund. So once that happens and we start investing, the folks who are in there start getting a return. Folks who aren't in there don't start getting a return yet, right? So, getting in sooner is obviously better, because then we're able to close deals sooner and we start giving everybody returns. Obviously, to go back to that whole legal stuff, no guaranteed returns are out there. That's not what we're guaranteeing. That's not at all what the intent is. The intent is to go and buy cash flowing properties with the best chance of being able to provide a great return to our investors. The market is what the market is, but we're going to do everything we can to buy good cash flowing properties that are going to support, be great investments for our investors, for our community. Um, uh, so yes, again, once we start closing deals, it should be within 6 months. We should be able to start providing returns to
Yeah.
our investors.
Yeah, yeah, and just to reiterate what you said there, we have to, it's a $10 million fund. We have a
Yep.
minimum target of $1 million. We have to raise $1 million before we can actually like legally buy anything, right? So we got to cover that, and based on the numbers that I'm looking at right now in the system, it's not going to take that long. There's a ton of interest every single day. We get more money that's being put into the fund from $500 to $1,000 to $10,000. It just keeps coming and coming and coming because people are excited about this opportunity, rightfully so. I would think they would be excited considering we spent 2 years building it. But regardless, when you're looking at an investment opportunity, there's a couple things you can do. One, review the documents. So when you go on to adpicapital.com, you click on the investor portal, you click on get started, you fill out that information. It brings you to we call it the deal room, which talks really about equity fund one. There'll be a little documents tab, and you can look at our full marketing deck, which shows you exactly what we're doing. And you can also look at the documents there. You can look at everything, the subscription agreement, the whole thing, and you can read through it, which we strongly encourage that you do before you sign anything, right? Because you have to sign, and then we have to review and countersign, and then only then are you able to actually complete your wire. So we wanted to make this, when building it out, as smooth as humanly possible. It's not like, we're a tech company, right? I mean, at the end of the day, we're a remote we're a remote education company, but we're remote, and we're remote because of technology.
Yep.
And we're able to go and build that into our system. So we found a really, really great tech partner in InvestNext. They're our portal. Shout out to the guys at InvestNext because they have made my life so much easier. And they put out a great product for us to use. But they're the ones that are able to go and help us raise the capital smoothly and easily through the pipeline. And you'll see that when you when you go in and you go and click on the buttons, and you'll see a button there that says invest now. You click on that, you literally create a username and profile. You then you're in invest next, and then it directs you, okay, this is what you got to do first. Update your profile. All right, sync your bank account. Okay, you do it through Plaid. It's super easy. Then once you do that, you go through the pipeline, you review and sign the documents, and you're good to go. I mean, it's very, very smooth. It can be done even from your phone if you want it to. You can do everything that way. So, talking about the ease of access, I thought was really, really important when we were setting this up. But expanding a little bit more on what we're investing in, we are targeting, every deal that we target has an 8% average annual return. So that's what we're targeting. And the deals that we're underwriting, yes, Adam is a conservative underwriter, but we have a lot of deals coming from our Multifamily Academy students, and they're motivated to, remember, bring us deals because they could qualify for community funding pretty much, right? So they want to bring us their best possible deals. It gets reviewed 3 times, and then it gets to Adam, then it gets reviewed again, and we're able to go and say, okay, we have this much money in the hopper. Do we want to invest in this deal? It goes to our board, which is, folks like myself and Adam, Tim Kelly, Eric Upchurch, Jill Campbell, the founder of Active Duty Passive Income, Mark Yansich. Like, we all have a ton of real estate investing experience, and we know that, we're under that pressure of, we can't let down our investors because that's letting down our community, and that goes against our core values at Active Duty Passive Income. So it's all intertwined, and we want it to be intertwined because it holds everyone accountable. And I think that is something that's something that a lot of funds just don't have. A lot of capital raisers don't have, especially if they're raising for individual deals. It just, they don't have that. They don't have that community that we keep talking about. So yeah, and one just quick disclaimer on the distributions and the quarterly returns. It's based off the distributable cash from that property.
Yeah.
Like, yes, within 6 months after purchasing the property, ideally we should be getting distributable cash from that property. But if there is no distributable cash, then no one's going to be taking a return,
Yeah.
including the fund. So it's just not going to be there, right? And everything that gets split, all the money that comes back in the form of distributable cash from these multifamily properties, your rent, if you got pet fees and you got parking fees and you got the laundry and blah blah blah, all this stuff, right? All that money comes back. It's super easy, guys. Get split 70-30. 70 to the investors, 30 to ADPI Capital, the fund, for providing the opportunity. There's no crazy hurdles. There's no confusing preferred returns. There's none of that stuff for the experienced LPs, or maybe you've seen other opportunities out there that have all of these crazy waterfalls and hurdles that just make it confusing. Again, goes back to who we are, not our audience. Can we do it? Of course we could. Do we want to? No. It's confusing. Like, why would we want to do that?
And that reminds
Yeah.
me. I mean, something you said there, uh, that it's distributed cash flow, right? And uh, he Kevin, you made a great point on even the fund, even ADPI Capital, us, we don't get it unless it's distributed cash flow. This goes back to the fact that we don't have any fees set up at the fund level or anything like that. So it's not like we're taking anything off the top. Our interests are completely aligned. Like, we need to buy properties that are cash flowing for us to even get paid. So it's the same thing with our investors. So if our investors aren't getting paid, then we're not getting paid. So we need to make sure that that the fund is functioning well, which is another good reason for me to stay conservative in my underwriting. So
Yeah. And we've been floating around this word alignment for a while now,
mm-hmm.
and that's really what it is. That we are focused at ADPI Capital among alignment, and bringing these opportunities to our investors. So again, if y'all are interested and you want to learn more how to get involved, I would say act fast, because this could fill up quicker than you can imagine. Act fast, but just go to adpicapital.com. It's just www.adpicapital.com. And there's a million ways to get involved. The easiest is click that big red Get Started button, fill out your information. It'll take you to the site, and you'll be able to build your username and password and get invested. Go through the process. Um, so we talked about a lot of we talked about our fees and how we don't have it. We talked about how you can get involved with an SDIRA. We even touched on the process of converting your TSB to an SDIRA, and we're going to have our friends at NCH in the near future going to be making a blog post about that, because they actually reached out and they said, hey, this could be really cool. We can help a lot of veterans convert their TSPs, and that's a service that they're professionals in. So they're going to be helping us by helping us write some content, and some not just content, but like write some a guide for folks who are interested in doing that. So stay tuned for that. And again, it's a multifamily fund. So if you're interested in multifamily, you don't have the time, you don't have the education, the know-how, but you want the benefits, you want the cash flow, you want to be involved in real estate in the ADPI community, and the ADPI Capital community that we're building, and you want to get involved in this fund, then this is your opportunity. No time like the present, right? And we talked about where the market's going, and we're quite pleased with everything that's going on, despite the fact that some investors are losing their shirts out there. Is what it is. But we're going to be there to pick up the pieces and to represent our community, the military community, and help them own more of the land that they swore to protect and defend. It's that simple. So, Adam, last words for listeners of this podcast about ADPI Capital.
Yeah, just I'm truly thrilled and excited to be able to jump into this. Uh, it's been a long time coming. It's been a lot of work to get it going. I don't want it to come across salesy or anything like that in what I'm saying, but it really is a fantastic opportunity for folks who really just want to invest passively. I was a very active investor even while active duty. For those of you who don't know, I bought a 62 unit apartment while living in Japan, so I was fully active duty. It was a joint venture, so it was me and some partners buying this property. So I know how much work it takes to do this while on active duty. There's a reason I left the military and I do this now, real estate and ADPI full time. There's a reason I did that, right? But I loved being in the military. I do miss it from time to time. But one thing that helps me, like we just at the time of this recording, just had a baby like 4 or 5 days ago, and
Congrats, by the way.
thank you very much. And I was able to be there the entire time. I just watched my wife walk by with our little girl a little bit ago. it I would not have been able to do some of the stuff that I'm doing now, with my kids, golf tournaments and traveling around, if it wasn't for what I'm doing. But for those of you who want to stay in, who are loving what you're doing, who don't want to jump out, don't want to do this actively, maybe you're not even in the military anymore, but you just love doing what you do and you just want to invest somewhere with your community. This is an opportunity to be able to do that, and it's I was excited to be able to bring this to the forefront, and I cannot wait to watch it just crush. So that's about it. Just remember, self-licking ice cream cone. Keep it flowing, everybody. Invest in each other. That's the whole point of what we're doing here. Everybody gets to invest in your brothers and sisters, right here inside the community. So it's really exciting.
Yeah, and in the span of us talking, Adam, I just looked at my email because I get these like ding ding ding
Oh
notifications.
yes.
Yeah, we've had like 10 people. And this, guys, this isn't like stream live or anything. This is just like this is a straight recording. But in the time of this recording, we've had looks like 9 people submit inquiries about it, and I got another notification that some ACH money is coming through today. So um, you know, get in while the getting's good. And if you have questions, you can reach us. You know where to reach us, but just shoot an email to invest@adpicapital.com. Or you can reach out in the messenger bot on our website, www.adpicapital.com. And we'll have someone get in touch and answer any questions that you might have. Um, Adam, thanks for taking the time, brother. And I'm sure I will be talking to you probably like 4 other times today about other stuff.
More than likely. Yeah,
More than
absolutely.
likely.
Well,
All right,
thank you
man.
so much for having me on. Looking forward to watching this happen and investing with everybody that's listening to this recording and many more. So,
Absolutely. Thanks, dude. See ya.
all right, later.